Hi everyone, this is Chris Holland, Director of Research and Investments at Valley National Financial Advisors. I wanted to provide a quick update today on oil prices. We've seen a lot of volatility in oil recently, and I just wanted to talk a little bit about what drives oil prices. And you can kind of break it into two different buckets. There are short-term drivers and long-term drivers of oil prices. When you think of short-term drivers, it's things like geopolitical conflicts, weather, and just any sort of like supply disruption. So if you think of geopolitical conflicts, the big one that has all the attention right now is what's going on between Israel and Iran. Iran is a big oil producer, and the idea that there could potentially be a war or a breakout of some sort of military operation over there that could impact supply, that scared a lot of people in the markets, and it caused oil prices to move up quickly from around $68 a barrel all the way up to almost $79 a barrel, a big spike. Also impacting prices recently were the hurricanes we've seen down in the Gulf Coast. That quickly causes a supply disruption. When you hear that a hurricane is forming, majority of the time, all those oil rigs in the Gulf Coast are evacuated, and that impacts short-term supply. Now, when you think about long-term drivers of oil, it's pretty interesting. Think about miles driven post the pandemic. The number of people who are working from home in a hybrid work environment, that just means there's fewer cars on the road, and that just reduces the demand for gasoline. Also think about how much oil the United States is producing. When you think about countries like Iran, Saudi Arabia, Russia, these are big oil producing countries, but the largest oil producing country is the US. We've been drilling and producing more than ever before, so supply is plentiful. And the last major thing to think about is EV, electric vehicle adoption. Right now, I know it's rare that you see a Tesla or an electric car of some sort on the road. Maybe you see one, occasionally a few times a week, but predictions are for what is roughly 1% of electric cars on the road today to increase to roughly 30 to 40% by the year 2030. So think about the impact that's going to have on oil demand. So with that said, when you see a lot of volatility in oil prices, typically it's a short-term impact, but there are these key long-term drivers that hopefully will continue to bring oil prices down, and that's good for the economy overall. Thanks very much for listening. We look forward to talking to you again soon. Bye.